From the world of politics to the world of business, this is Balance of Power with David Weston.
From Bloomberg World Headquarters in New York to our TV and radio audiences worldwide, welcome to Balance of Power. I'm Joe Matthew, in for David Weston. U.S. employment costs jumped by the most on record in the first quarter, according to new data from the Labor Department. And for more on that story and some of the trends that we're seeing in the economy this week, we bring in Michael McKee, Bloomberg International Economics and Policy Correspondent. Mike, thanks for being here. Incomes and spending that we saw today seem to reinforce what we learned in the GDP report yesterday. While a negative number, it shows the consumer is still out there spending.
And things got better as the quarter went on. That's the thing about the ECI. You take a look at the chart of what happened, and we saw wages and salaries rise at the highest pace since 2000 in the ECI, but it is also the quarterly number. And you look at the PCE numbers, the inflation numbers, there was two bits of good news in there. One is that wages and salaries rose, but at a slower pace, and that the headline numbers are growing faster than the core, which does suggest a lot of that is food and energy, and so maybe inflation is starting to slow down.
Wow. The PCE, of course, the Fed's favorite inflation gauge, up year over year by the most since 1982. Does that just reinforce the Fed's plans already in place?
Oh, absolutely. They're going to do the 50 basis points, and then they'll consider another 50, and they'll keep raising for the time being unless they see some conclusive evidence that inflation is heading down towards their target. Wages and salaries, as I said, were up 0.6% compared to 1.1% before that, but we're also seeing inflation on a headline basis, which is what Americans are going to focus on, rise at a significantly higher rate.
How much of the spending is due to rising wages, the strong job market that we're talking about here, versus money that we socked away, money that people saved during the pandemic?
Well, savings went down. The savings rate went down, which does suggest people were dipping into those savings accounts. But remember also, these are not adjusted for inflation, these spending numbers. So if you adjust for inflation, they were significantly lower. One reason they're strong is because people are paying more for everything that they're buying.
Big thanks to Bloomberg's Mike McKee helping us through the data this week. And for more, as we look ahead to next week's Federal Reserve meeting, I want to bring in Jason Furman, former chair of the Council of Economic Advisors at the White House, professor of economic policy at Harvard's Kennedy School. Jason, it's great to have you with us here as we continue building the economic puzzle here with more data points today, as we were just discussing with Mike. Show the consumer holding up incredibly well in the face of inflation. How long, though, can that last?
You know, consumer spending has been just one of the most amazing things over the last year.
Sure has.
Which is every month service spending continues to grow back towards where it should be. And at the same time, goods spending continues to stay high. Like I like looking at sporting equipment. Sporting equipment sales were more than 10% above normal this month. Again, for more than a year straight. I would have thought everyone had all the baseball bats and mitts they needed, but they're still, they still are buying more of them.
That's something. So what's your current outlook for inflation then, Jason? We do have a Fed meeting next week. How long is it going to take to get down to that 2% mark? Are we into next year?
I think I don't know when we're getting to 2%. I think the underlying inflationary trend in our economy right now is about 4 to 5%. That's based off of the wage growth we saw. That ECI number came in above expectations. It came in high. That was the most important number we got today. So I think the underlying trend is 4 to 5%. I think there is some upward pressure on that trend because labor markets remain very tight. I think it's a while before the Fed can get this down.
So I guess how high then to get this from the other side does the Fed need to hike? Some are suggesting 4% or even higher. This is a conversation that was had a bit earlier. Larry Summers, the former Treasury Secretary, speaking with Bloomberg. I'd like for you to hear his take on the Fed's expected hike. Take a listen and we'll have you reply. Here's Larry Summers.
My guess would be that the Fed's going to need to go further. I think that in order to reduce inflation, you need to raise real interest rates above their neutral level. If we've got 3 or 4% inflation and the neutral real interest rate is, as the Fed believes, 0.5%, then you're going to have to be up in the 4.5, 5 range to get inflation meaningfully down.
And we'll have the full interview with Larry Summers tonight on Wall Street Week at 6 p.m. Eastern Time. All that said, Jason Furman, what does that say to your expectations, not so much next week for the Fed, but beyond?
Yeah, I think the Fed has done a very good job on the front end. They're actually moving further and faster than what a lot of their critics were calling for. They're going to get rates back to 2.5% faster than I could have imagined. I think where they have more work to do is setting the expectation that they're going to keep raising rates as long as they need to, that might be a while. And absolutely, I agree with Larry, rates above 4% are, very plausible, very likely to be needed. Yeah. I think it actually is what the Fed is going to do. I just wish they were sending clearer signals and that the market believed that was going to happen.
I'd like to get to the causes of inflation with you for a moment here, Jason, because you wrote an important column for Project Syndicate just last week that questions the conventional wisdom, the arguments that we tend to hear from the White House, that inflation is happening because of the supply chain bottlenecks that we've seen and because of the pandemic. You're writing that there's much more involved here, that this is about demand that will make this likely last longer than those other two phenomena. Where is the administration wrong on this?
Look, it's not just the administration. I think a lot of people have overstated the importance of supply shocks in all of this and understated the importance of demand. And I think that demand has a lot of persistence to it. Why do I think that? Well, if demand increases a lot, you're going to see supply problems. But it wasn't the supply problems that caused it. It was the demand increase that caused it. And that's what we're seeing, for example, in ports, where the volume in ports is way up. It's just not up as much as we wanted it to be. And broadly, there's sort of a disconnect. People talk about supply chains as an excuse for high inflation, but then they don't talk about it when they talk about real GDP growth. Yeah. Real GDP growth has been strong. If supply chains were such a problem, we would have also seen weak real GDP growth.
Janet Yellen didn't talk about it yesterday in an important speech, Jason. I know that you were there, and I wonder what your thought is as the Treasury Secretary talked about lessons learned from the pandemic policy response, made no mention whatsoever about the side effects of inflation. Was that an oversight or worse?
Look, I think the American Rescue Plan contributed to inflation. I think the American Rescue Plan was too large. That going forward, though, the administration can't do a lot about inflation. I mean, inflation really is the responsibility of the Federal Reserve. Jay Powell is basically their inflation czar.
That's right.
And the one who's tasked with bringing it down. So I think it's the Fed that really needs to make sure it internalizes these lessons and changes. And I think it's done a lot of that pretty well.
Well, with that said, and the dual mandate in mind, is the lesson for Democrats here who are just getting hammered, starting with the president on down through the rank and file on Capitol Hill, is the lesson here that we should be, in fact, much more aggressive about inflation than we are about employment?
I think it's that you want to be balanced. I was involved in the response to the last crisis. We had too little employment and inflation was too low. Yeah. This one, the problem is the opposite. So I think you want to get a balance, and there are better places to strike the balance than where we are at this moment.
So what's the messaging from Democrats? What should it be, Jason? If you're back in the White House, you're advising the president. You have to keep talking about it, but you also cannot overpromise. It's difficult, obviously, based on our conversation right now, to know what the trajectory is going to be. Because come November, there are going to be some tough questions to answer, Jason. How should this be communicated from the White House?
Look, I'm not a communications genius, but when working with the communications people, I tell them three things. One, don't expect this inflation to fall down very quickly. So be prepared for this to last. Number two, it really is hurting. Real wages are down. And number three, the main solutions to this in reality are, at the Fed. In the White House, there's some things they can do. I think the SPRO release was a good idea. I think the student loan pause was a bad idea. One of those is going to help inflation. Yeah. One of those is going to hurt it. But you sort of need to take those inputs and then form your best judgment about communication. But there's no great way to communicate about this until we have lower inflation.
Always a great conversation with Jason Furman. Jason, we thank you for your insights today. Coming up on Balance of Power, with inflation at the highest levels in decades, a volatile stock market, a war underway, who's to blame? We're going to look more at the messaging battle with Frank Luntz. This is Balance of Power on Bloomberg TV and radio. This is Balance of Power on Bloomberg TV and radio. I'm Joe Matthew. Thanks for joining us and keeping you up to date now with news from around the world. Here's First Word with Mark Crumpton.
Joe, thank you. In Moscow, the central bank slashed interest rates and forecast sanctions would trigger a bigger economic drop than expected before the war. Germany has signaled it wouldn't oppose a European Union embargo on Russian oil. Last night in Kyiv, Russian missiles killed a journalist in her home just as UN Chief Antonio Guterres was visiting Ukraine's capital. Odessa was also hit. The battle for the Donbas region remains Russia's strategic focus, and territorial gains have been slow in the face of stiff Ukrainian resistance. China is stepping up its rhetorical support for Russia, defying the United States and other nations who want Beijing to condemn Moscow for the war in Ukraine. China's foreign ministry calls the China-Russia relationship a, quote, new model for the world. Beijing has criticized U.S. cooperation with blocs like the North Atlantic Treaty Organization. China claims its expansion led to Russia's attack. Officials in China are defending the COVID-0 strategy as the best way to fight the pandemic. They say the current outbreak is coming under control, with cases in Shanghai showing signs of turning around. The lockdowns have been criticized for exacting heavy social and economic costs. A London judge sentenced tennis champion Boris Becker to 2.5 years in jail after finding him guilty of deliberately ignoring the terms of his bankruptcy agreement. The three-time Wimbledon winner is accused of, quoting here, deliberately and dishonestly putting funds out of reach to creditors. Becker declared bankruptcy in 2017. He was more than $50 million in debt, blaming it on his divorce and, quote, expensive lifestyle commitments. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg. Joe?
Mark, thank you. As prices keep rising ahead of the midterm elections, messaging surrounding the economy could be more important than ever for the Biden administration. Joining us now to talk about this, Frank Luntz, pollster, communications consultant, and CEO of FIL. Frank, it's great to see you. We've been talking this hour about rising inflation, a weakening economy, a war in Ukraine. Some people are already, as you well know, comparing Joe Biden to Jimmy Carter. He's not even halfway through his first term. How does Joe Biden and the Democrats at large message on this malaise, if I can use that term, ahead of the midterms?
Well, I know what they're trying to do. They're trying to blame the Republicans for all of this. They're trying to raise Donald Trump whenever they can because Trump is less popular. Although how things have changed so much in the last 100 days is that the polls that I've seen have Donald Trump ahead of Joe Biden if there were to be a rematch. That clearly the voters are not just frustrated, not just anxious, they're actually angry at rising prices on food, on fuel, on things that people need. And unless the Biden administration acknowledges that it got things wrong, acknowledges that their policies have not worked, at least in the current environment, I don't see how they right the ship. Quite frankly, I believe the Republicans win the House, but I still think the Democrats keep the Senate.
Interesting. So you mentioned Donald Trump there, and with that in mind on the Senate, primaries are going to get underway in earnest in May here. There are three big ones, Ohio, Georgia, Pennsylvania, where Donald Trump has planted his flag and made endorsements. Is his kingmaker status really on the line, or does it not matter what happens in these races for kind of a bounce back on Donald Trump because of the hold he has on the Republican Party?
It does matter. It matters significantly, and everybody's going to be watching it. That up until now, he's raised more money than any other politician in the history of American politics. That his fundraising base is based on their expectation that he does run 2 years from now, 3 years from now. And they believe that he's still impactful. If he should lose those primaries, and particularly the governor's race, that's the one I'm watching. The governor's race in Georgia, because he hates Brian
Yes,
Kemp.
he does.
He blames Brian Kemp for why he's not president. If he failed to win that race, or failed to win at least one of the 2 Senate races he's involved in, Ohio and Pennsylvania, then yes, he is going to be hurt. But right now, make no mistake, Donald Trump is the front runner for 2024.
Frank, I've been looking forward to asking you about the situation in Florida, the fight between Governor Desantis and Disney. Desantis is getting huge marks in the culture war here. It's resonating very well for his brand. He's out talking about it, it seems, almost every day. But could this be destructive to the Republican pro-business brand?
Well, I urge every CEO watching, and a lot of them do, to pay close attention, because if Disney could have trouble mixing in politics, then every single company can. And Disney, with the best corporate reputation in America and one of the best across the globe, that it should get mixed up in this. What bothers me is not actually what DeSantis has done, because Rick DeSantis is a very smart politician. What bothers me is that we now look for every reason to divide as a society and in politics. We look for every opportunity to own the opposition. The fact is, most parents don't want their 7-year-olds talking about sexual identity. And most workers, employees, don't want their company involved in politics. So quite frankly, this is a tragedy. It's a symbol of what's to come over the next few months and even the next few years. Corporate America should focus on satisfying their customers, should focus on making their employees happy and healthy, serving their communities. And the American people are saying, stay out of politics. And they say to the elected officials, don't try to own the corporation, just do your job.
Well, how about supporting your employees in their political views? That was what Chapin was trying to do here, right? The Chapik, rather, was trying to do here after his employees rose up and said, no, wait a minute, this isn't fair what's going on in Florida.
I want to give Bob Chapek credit, and I think he deserves it, for standing up for his people. But what the public says is do so on an individual basis. Back your people in their causes and their mission, but don't tie your company to those individual causes, because it may not be the cause of another employee. It may not be the cause of the customers that you serve. Chapek was trying to say to his people, you matter, I hear you, you count. Brilliant. But he should have done so on an individual basis rather than adding the corporate moniker to it.
Based on what you just told me about Disney and what you said earlier about Donald Trump, how important are Georgia, Pennsylvania, and Ohio to gauging whether Governor DeSantis could in fact be a front runner himself in 2024?
Oh, I think he is a front runner. And in fact, if Donald Trump doesn't run, I think Governor DeSantis is the most likely presidential candidate. And you know what? He's been a good governor. If you look at the record, the economic record, the COVID record, Governor DeSantis has done everything by the book, and everything has turned out well. The question we now have is, what country will we have 3 years from now? Will we be able to have conversations like the one you and I are having? We'll be able to disagree without destroying each other. That's what I'm concerned about. You know what? There are things more important than profit. There are things more important than elections. The health and safety of the American people and the strength and security of our democracy, that's what matters most.
Well, those are huge concerns that you're illustrating, Frank Luntz. What you're describing there is the decline of America, is it not?
I know that. It is. It is. I acknowledge that, and that's why I'm begging, because you've got the wealthiest audience on television is watching this show right now and listening to it on radio. And I'm saying to the people there that the size of your bank account is actually less important than the strength of our democracy. And I appreciate opportunities like this to challenge the political world and the corporate world at the same time, and the cultural world. Please do the right thing for the right reasons.
This is why I wanted to talk to you today, Frank Luntz. Thank you very much for your insights. Coming up, shares of Apple, Amazon are getting hit hard after reporting quarterly earnings. We're going to check in on the market reaction to big tech this round. This is Balance of Power on Bloomberg TV and radio.
Earning earnings season is here.
A very good quarter against an incredibly choppy backdrop.
The uncertainty is palpable.
We are cautiously optimistic.
Bloomberg breaks the numbers first.
JP Morgan's spot on.
Delta flying. Beat on fixed income trading, on equities trading.
With exclusive expert analysis.
It's a stunning statistic.
Bank earnings not resonating with investors.
What's the disconnect here? Are they bracing for the worst?
Can the market still go higher?
Bloomberg Television and Radio. The fastest numbers and analysis you trust.
This is Balance of Power on Bloomberg TV and radio. I'm Joe Matthew. Stocks lower today as big tech earnings fail to impress investors once again. For more, we bring in Bloomberg's Kriti Gupta. Kriti, what are you looking at this morning? It's Apple, it's Amazon, and nobody can say anything good at the moment.
Yeah, it's interesting because this is coming in this kind of broader move of essentially growth fears. And it's interesting that you're seeing the sell-off really led by Apple and Amazon coming off of those earnings. A quick recap for our radio and television audience of simply what those earnings were. Apple coming out and saying that they could see $8 billion, as much as $8 billion of costs related to those supply constraints. Now, Joe, Tim Cook, the CEO of Apple, has really built his legacy on this idea of really securing his supply chain to something that has proved really well for Apple, even going back to the trade war, where, of course, we know Apple, their supply chain goes back into China. A similar story for Amazon, where they're talking about operating margins. They've spent so much in terms of labor, in terms of warehousing, in a decelerating growth environment. How much of those investments are really going to be paying off? And that's really the question that's driving both stocks lower today.
One thing's for sure here, Kriti, no one is buying the dip. What does that tell you?
No one's buying the dip, but it's interesting to see who the actual players in the market are. I love to look at VandaTrack simply because they track how much of the bid is actually retail versus how much is institutional. And they're saying that a lot of the selling is driven by institutional traders. It's why you're seeing such volatility in the markets right now, really driven by tech. The bounce backs that you're seeing, though, are retail bounce backs. So a lot of this isn't necessarily what narrative is driving the moves, but simply who is driving the moves.
So we've heard from essentially big tech, certainly the FANG companies here, Kriti. Next week is going to bring another round, but earnings season really is starting to cool down here. Are you getting to the point where you can call a trend, or has it just been chaotic, each company with its own story?
I think each company with its own story here, and it really depends on the sector. I mean, on the one hand, you have this deceleration essentially that you're seeing in big tech. A lot of those warnings that we had heard as early as last summer of 2021, now finally catching up to big tech inevitably. But you're also hearing a different story in, say, like the energy sector. If you want to view tech and energy as opposites, the energy sector saying, well, they had a great quarter. Their profits are the highest going back to, say, 2012, the most in a decade. Right. And they're actually looking at even more buybacks.
Yeah, monster earnings from ExxonMobil. Thanks to Bloomberg's Kriti Gupta. You can catch Kriti later this afternoon on Bloomberg Markets. She digs further into the big tech and commodities. I'm Joe Matthew, and this is Bloomberg. This is Balance of Power on Bloomberg TV and radio. I'm Joe Matthew, keeping you up to date now with news from around the world. We turn to First Word with Mark Crumpton. Mark.
Joe, thank you. In Tehran, thousands of Iranians marked Jerusalem Day today, expressing support for Palestine. The annual marches have been suspended for 2 years during the coronavirus pandemic. Demonstrators chanted "Death to Israel" and "Death to America." The slogans have become tradition during mass rallies in Iran since the 1979 Islamic Revolution. Demonstrators also set fire to American, British, and Israeli flags. Russian forces have pounded targets from one end of Ukraine to the other. That included Kyiv, which was attacked while the head of the United Nations was visiting. It's the boldest attack on the capital since Russian troops retreated several weeks ago. In France, half of the nuclear reactors are offline for maintenance, keeping power supplies tight. France is traditionally one of Europe's biggest electricity exporters. 28 reactors are offline for lengthy repairs. French nuclear output is now the lowest in more than a decade, keeping power prices high and potentially worsening Europe's supply crisis. The White House is considering giving at least $10,000 in student loans per borrower through executive action. The move comes as President Biden seeks ways to bolster voter enthusiasm ahead of the November midterms. Some deficit hawks worry it could worsen the inflation that is already weighing heavily on Democrats' chances of retaining control of the House and the Senate. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
Mark, thanks. We're joined now by Myron Brilliant, the executive president and head of international affairs at the Chamber of Commerce, and is with us in studio. Myron, it's great to see you. Thank you for being here. This has been an hour of some pretty difficult subject matter. A slowing economy, inflation that's stubborn and has been confounding the administration, all against the backdrop of a war in Europe. We know that the Federal Reserve is sticking to its plans to knock down inflation, regardless of what some of the other factors may be. How concerned is the Chamber right now about an economic downturn or even a recession after that GDP yesterday?
Well, I mean, Joe, it's great to be in studio. First off, no question, inflation's high on the minds of corporate leaders across the country. By the way, so is worker shortages, talent shortages, the need to invest in engineers and construction workers and people in hospitals. So there's those issues as well. You have supply chain blockages, the COVID policies in China that have caused supply chain disruptions. And then you have huge geopolitical risks, right? Of course, with Russia and Ukraine, and that's short and medium term, but long term, the rising tensions in the U.S.-China relationship. So you've got a tsunami of challenges, and we've got to really get to work in Washington and get those issues resolved and worked on.
You've been talking about trade quite a bit, in digital trade specifically. I know you're out with a report in the Chamber calling for a digital trade agreement. Which might not be top of mind for everybody, but if you think about it, it would guarantee the ability to move data, if I understand this correctly, across international lines. You've even identified what you're calling a digital dozen, other countries that we could band together with to make this happen. What's the biggest barrier to digital trade? Is it China?
Well, first is having ambition in the United States, okay? In the last decade, the United States has not launched one new trade agreement. Europe has done 46 trade agreements with 78 countries. China just joined the Regional Economic Initiative in Asia. We're not part of the Trans-Pacific Partnership. Where we have our competitive edge, one of the spaces is digital and services. So let's double down on that. Let's get countries to adopt high ambition standards. Let's look at cross-border data flows. Let's ensure the right regulatory practices are in place. And that's what we're encouraging our administration to do. So it starts at getting the United States active in trade policy, leading from the front. There is encouraging news. The administration is looking at a digital trade negotiation as part of this newly launched initiative that they hope to get off the ground in the next couple of weeks around the International Pacific Economic Framework. But we can't sit on the sidelines. We got to be in the game.
Competing more with China has been a big theme in Washington. It doesn't seem very controversial. Democrats and Republicans seem to agree in essence on this. But this innovation and competition bill, USICA, whatever you want to call it, it's changed names multiple times. It includes the CHIP Act with that $52 billion to inspire or motivate more domestic chip manufacturing. It's been grinding through Congress, Myron, for a year now. They can't even get a conference committee together on this, at least not yet. What's taking so long between these two bills coming together through the eyes of the chamber? Do you prefer one or the other, House, Senate?
Well, first off, Joe, we got to deal with the broader macro U.S.-China dynamic, and we've got to confront China on its unfair regulatory practices, and we got to deal with China on market distortions around subsidies. But we also have to have a strong domestic component to our agenda. And so the idea behind the investing in the semiconductor industry, we're all behind it. The problem is the House version is laden with problems. The Senate version is the one we favor.
They're very different bills, right?
They are different bills.
Can
in
you
areas
explain?
like, for example, the trade rules that are adopted in the House version are problematic for a lot of industries. And you also look at issues like outbound investment. The way the language is written in the House version, very broad. It would curtail trade and investment with key countries around the world. We're very concerned about a slippery slope there. So we have differences with the House version. We are more aligned with the Senate version. We think they can get something done. It's in the interest of our country to expand competitiveness of our domestic industry, so we need to double down on that. And at the same time, we've got to look at how the United States trade policy community, first the administration, but Congress, work together to eliminate tariffs, to address these kinds of flaws in our U.S.-China relationship, and, of course, to expand trade.
Well, you just said a lot, but the point is here, the chamber is behind the Senate version of the bill. I spoke yesterday with the Commerce Secretary, Gina Raimondo, about this. She's been pushing for this, as I'm sure you know, for months and months, and seems somewhat confounded by the fact that it's taken so long. Here's what she told us on Bloomberg.
The single biggest risk to delay is that these chip companies will expand in other countries, and they have to, right?
What are these other countries offering them, Secretary?
Money, same thing that we want to offer them. Germany, Singapore, certainly China, France, Spain, all have subsidies on the table now.
Does the chamber share that concern that if we don't act now, the Intels, the AMDs, and others go to other countries? They go overseas and follow the money.
Well, Secretary Raimondo's right. There are alternative sources for money. There's alternative markets. We need to have a robust domestic investment in the semiconductor industry, in the EV, electric vehicle industry, and other industries. We've got to up our game domestically. But we can't close down the opportunities to expand in other markets, right? So while we're investing domestically and thinking about resiliency of supply chains and thinking about the role of the U.S. markets, we also have to continue to recognize the United States leads from the front on trade, and that means also making strategic investments abroad. So she is right. There is a problem in Washington when we can't get things done that make common sense. We have a bill, Senate version, we love. Let's move forward with that. Let's reconcile it in the conference, and let's get something done.
Talk to me more about international investments, though. We need foundries, the administration says, here in the U.S. What would you be doing elsewhere around the world?
Well, Joe, look, we can't bring everything back home to the United States. This is not practical, right? Already, corporate leadership around the country is looking at geopolitical risks, making some decisions about the market of China. It's an important market for a lot of U.S. companies, but also you've got to counter that, right? With Vietnam investments, with Mexico investments, with other investments that all tie back to our supply chains here in the United States. There's things we can do at home, but we don't we don't have all the minerals at our disposal. We don't have all the metals. We need to go find that, right? And look at what happened with Russia and Ukraine. We no longer have the nickel supply we need in this country, right? So where are we going to get nickel to help with our steel? We got to go to other markets.
So investing in supplies and materials, but manufacturing here in America.
Much more manufacturing should come back to the United States, but it won't be just here. We are selling and exporting half of what we produce in this United States, right? Half of what's manufactured in the United States goes elsewhere. What does that do? It creates jobs in our country. Let's not forget that.
Great view, great conversation with Myron Brilliant. Thank you, Myron, for coming in. It's good to see you in person here. With the Chamber of Commerce on Balance of Power, coming up, we'll hear from the head of the Flight Attendants Union on the challenges they're facing with mask confusion. This is Balance of Power on Bloomberg TV and radio. This is Balance of Power on Bloomberg TV and radio. I'm Joe Matthew. Thanks for joining us. Major airlines have dropped their mask mandates, allowing customers to choose whether or not to mask up. But it's a bit more complicated than that. And for more on reactions to this change, we bring in Sara Nelson, Association of Flight Attendants, CWA President. Sara, it's great to see you. Thank you for coming back to talk to us. The last time we spoke, it was a few weeks back. It was before the mandate actually dropped, and you were talking about some of the many challenges that flight crews have experienced here. Now that it's gone, there's a relief for flight crews, but there's also a patchwork of policies. In some cities, you have to have a mask in the airport only to take it off on the airplane. How much of a problem is that confusion for your members?
It's always a problem, Joe, when people are giving different instruction in different spaces and they can't keep up with what the rules are. Most people actually want to follow the rules and comply, but when they're not prepared to do so, don't have certain expectations, and those expectations aren't met, that gives rise for anxiety, and that can often lead to conflict, and it makes our jobs harder. So the way that this was communicated in the first place, from one moment in time while flights were already in the air, that was a chaotic situation that we would not want to duplicate ever again.
So you would call this an improvement. Despite the existing confusion, things are getting better for association members.
Well, listen, there was a collective sigh of relief with the end to the mask mandate. And the reason for that is because flight attendants have been on the front lines taking the brunt of enforcing this. We don't make the rules, but we enforce the rules to keep us safe. And flight attendants themselves were having to wear those masks 15, 16, 17 hours a day if you include the time that they're transiting to and from the hotel. So, this was very difficult for flight attendants, and they're glad that they don't have to do that anymore. But I have to tell you, the conflict doesn't end on the planes, and because people are getting upset for a lot of different reasons, and a lot of those physical confrontations that you've seen on the evening news, those are the result of other issues entirely, not having anything to do with masks. So we still have a lot of work to do to calm down our skies.
With that said, Sara, should customers who were kicked off of flights for being aggressive, for refusing to wear masks, for actually assaulting flight crews over the last 2 years, should they be on a no-fly list? Should they never fly again?
Well, let's be really clear. If someone got physical, if someone assaulted a crew member or another passenger, they should. Their flying privileges should be gone. And there is a bill in Congress to put this in place that would be enforced by the TSA. And we could do that. We could have a transparent process where there's also a due process. So people do have the ability to appeal. They also have the ability to try to get off that list at some point in time.
Okay.
But if someone was aggressive and violent, absolutely, they need to be banned. If they just didn't follow the rules, then we need to have a process in place where maybe they can come back on board if they were just refusing to comply with that mask mandate. But it should not be a blanket, come on back right now, because we're sending the message to everyone that the rules overall don't matter. And that's just not true. We have to keep everyone safe.
Last time we spoke, you were also concerned about the role that alcohol was playing in this, not so much on the airplane, Sara, but in the airport and the aggressive marketing that we're seeing there. People are getting sloshed before they get in the gate even and walking onto the plane as a starting point there. The mask mandate coming down is not going to change that. Should booze be banned in airports?
Well, Joe, I can tell you right now that I could take that position, but it would not be a popular position,
I'm sure
and I wouldn't. And I wouldn't win. Here's what we want, though. Alcohol has always been a problem in the skies. It's always been a major contributor to disruptive passengers, to violent passengers. And so we don't need what happened during the pandemic, which was a to-go policy for these concessionaires and the bars and the airports that were in place for public health measures that they have kept in place because they determined this is a way that they can earn money. So what we need to do is we really just need to have a crackdown in the airport where we're not pushing the to-go alcohol, where we've got clear signage, and also that all of the bartenders are trained in the stoplight system so that they're not serving people to the point of being inebriated before they come to our planes. And we just have to be really clear with people that the boarding will be denied if you appear to be inebriated, and you can't bring your own alcohol on board. You have to wait to be served by an aviation professional.
Your union represents 50,000 flight attendants at 17 airlines, Sara. We've started hearing from some of those airlines coming back to life, if you will, after COVID. And a lot of people, strong demand to get on airplanes. We've seen quite a number of delays because of a labor shortage, difficulty getting crews to gates in time or even to cities in time for planes to take off. How much of a problem is this going to be, the sort of growing pains of coming back to something closer to normal?
So, Joe, first of all, I just want to really applaud our union and working with the airlines to get the federal relief in place that kept people in their jobs, kept paychecks going, and kept us in place so that we could meet the demand. This would be much, much worse if we had not done that. But here's the issue. Before the pandemic, the airlines were routinely scheduling based on extreme number of voluntary overtime hours. And people are not willing to pick up those overtime hours at the same rate that they were before. Flying is a lot harder now. And flying is a lot harder now. So they are having a problem because they had been planning on scheduling with a certain number of staff. And now we're just not picking up those overtime hours like we used to. So they're trying to hire and staff up but also airlines have been a little bit more thoughtful about pulling back on their schedules a little bit, not being quite so aggressive. They were quick out of the starting gate there as we started to see demand come back and wanted to compete with each other. And they really got a little bit over their skis there in adding too many flights without being able to staff those flights. And, we've got to have that consumer confidence that you're actually going to be able to get to where you're going if you're buying a ticket. So it's important that they're working with us on scaling back on those flights, being able to meet those demands. Also, when they run into trouble, negotiating with us incentive pay. So there's a little bit more incentive for people to pick up those trips and meet that demand.
As that comes back into alignment and the reopening continues here, Sara, you're dealing with a lot of challenges. We're talking about a tough job. This is a difficult way to make a living. It is also essential, as I think we've determined in this conversation. What would you tell a young man or woman who wanted to be a flight attendant that hears about all of this madness that can go on in the air? Why would they want to do this for a living?
Well, look, we used to say that it's because we love people and we love to travel. And fundamentally, that is true. If you are a people person, there is nothing like working with a crew of people who are much like you, who come from a lot of different backgrounds, are typically very highly educated as well. And as we get back to normal, of course, demand has picked up significantly domestically. We don't have that international travel at the level that we used to, but there's going to be a lot of hiring right now. And the first thing that I would say is if you think this is something you might want to do, raise your hand now, because seniority is everything in this job, and it'll allow you to get better pay and also better schedules, and so get in line.
Seek tenure, says Sara Nelson, the president of the Association of Flight Attendants, CWA. Sara, thank you for being with us. Coming up, we talk national security and the war in Ukraine with our own political contributor, Rick Davis. That's coming up next on Balance of Power on Bloomberg TV and radio. This is Balance of Power on Bloomberg TV and radio. I'm Joe Matthew. National security and global trade are in the spotlight as the war in Ukraine rages on. And for more on this, I want to bring in Bloomberg political contributor and Stone Court Capital partner Rick Davis, who joins us live from the McCain Institute's Sedona Forum in Arizona. Rick, it's great to see you. Thanks for being with us here. You're the chairman, of course, of the McCain Institute. And you've got strategic competition as a theme as you bring in people from all over the country, some big thinkers, military analysts, and corporate executives with an aim at China and Russia, which is what we have been talking about this entire hour. I want to ask you a little bit about that, Rick. But first of all, how come Sedona?
Sedona is a place where John McCain and his family would come. They have a home here. And it was where they raised their kids, but they also made all of big family decisions about running for president or things that he wanted to do as a member of Congress. And so it has a lot of significance as a place where he would bring world leaders to spend time with him. And so it was a natural selection to want to have a conference here where people from around the world and across our country could come to discuss really important matters of the day.
Well, we talk about them just about every day, you and I together, Rick. So we want to get into this a bit as we head for this weekend that could be a very dangerous one for the Ukrainian military, with Russia bearing down in the east, the Donbass, and of course, trying to connect the dots across the south to leave Ukraine a landlocked nation. What are you hearing there at this conference in Sedona from military leaders as they try to figure out their next move in supporting Ukraine?
Of course, we're really looking forward to our dinner speaker tonight, General Milley, who's the head chairman of the Joint Chiefs of Staff.
Yeah.
So we'll get a firsthand look at what's going on with war planning from the U.S. perspective. But everything I've learned is that this is really the primary focus of the weapons that are being dispatched to Ukraine today from the U.S. to fight in the unique battlefield that is the South. And it's pretty clear that Vladimir Putin, as John McCain used to say all the time, wants a land bridge to Crimea, but even more so, all the way to Odessa. And it's incumbent upon the Ukrainians to try and keep that from happening. And so far, what we're hearing is that it's a real give and take, but that news today is that the Russians seem relatively stymied in that mission right now, and the incredible amount of aid that's coming in should help the Ukrainians keep them bottled up.
$33 billion worth. Rick Davis, we thank you and good luck with the conference this weekend. Check out the Balance of Power newsletter on the terminal and online. And coming up, Balance of Power continues on Bloomberg Radio. Hour number 2. I hope you'll join us. I'm Joe Matthew, and this is Bloomberg.